Let's skip the conventional corporate platitudes. We are here today to discuss INA's executive briefing on strategic capital preservation. Look at the primary title on this slide: The Economics of Flourishing, Engineering the High-Yield Organizational Ecosystem. The traditional approach for business leadership is to look at human capital through a rear-view mirror, focusing entirely on lagging indicators like annual payroll or exit interviews. Today we are turning that model upside down. We are going to look at human sentiment not as an emotional variable, but as a leading economic indicator that dictates your margins, your operational velocity, and your ultimate enterprise valuation. On the left side of this slide, you see the mechanical extractor. This is the outdated industrial-era framework where labor is treated as a mechanical expense to be minimized. The systemic output of this model is predictable: high friction and capital leakage. On the right, we have the living ecosystem, where the organization operates as an interconnected organism and human thriving is engineered as a forward-looking financial asset. Let's be entirely direct here. The era of treating human capital as a discretionary expense is over. As highlighted right here on the slide, deep care for human lives is a mathematically proven driver of margin expansion. If you view your 100-person team as a collection of machine parts to be squeezed, the machine will continuously break down. Let's draw our eyes to the Waterline graphic on this slide. Above the surface, you see your visible payroll, a number your accounting team tracks precisely. But look directly below it, the gray space of unmanaged churn and toxicity. This is where cash evaporates. The cost of ignoring systemic friction is not a passive oversight. It is an active evaporation of protected institutional knowledge and liquid cash. Look at the math. General replacement costs 50% to 200% of annual salary, and C-suite turnover escalates to 213%. For your team of 100, if you lose just 5 key performers over the next 2 quarters at an average salary of $80,000, that is a hidden cash burn of up to $400,000. Look at the 3 dials labeled systemic risk across the center of this page. These are not hypothetical projections. They represent hard corporate exposures. First, the administrative liability, an $850,000 total average exposure composed of a $250,000 legal defense plus a $600,000 jury award for ignoring harassment or toxicity. Second, the operational drag, a 78% increase in non-discretionary absenteeism in low-engagement cultures. Third, the asset depreciation, a 63% spike in safety incidents, and a 32% increase in critical quality defects. When unmanaged digital exhaustion and unmanageable workloads breed these liabilities, your 100-person firm pays for it daily via missed deadlines, compromised delivery, and compliance exposures. Let's evaluate the margin expansion engine. Look at the gold and gray bars comparing bottom quartile engagement against top quartile engagement. The data shows that top quartile units don't just achieve marginal gains, they redefine operational excellence. Notice the precise lifts indicated on the right: A plus 23% lift in profitability, and plus 18% lift in sales productivity, A plus 14% lift in production output, and A plus 10% lift in customer loyalty. When your talent is thriving, they optimize asset utilization and expand your margins naturally. For a 100-person firm, moving from the bottom quartile to the top quartile transforms your existing headcount into a hyper-efficient revenue driver without adding a single dollar to your baseline fixed payroll. This slide traces the literal pipeline of cash flow through 3 distinct nodes: employee state, customer experience, and revenue velocity. Let's look at the metrics inside the first pipe. Satisfied individual contributors are 12% more productive, and happy sales representatives generate 37% higher sales conversions. That internal energy flows directly into the center pipe. Customer-centric cultures anchored in Flourishing achieve a 74% better customer retention rate. What is the aggregate macroeconomic result? The final golden node. These integrated factors result in 60% higher profitability compared to industry peers. The human asset is a high-velocity engine of institutional capital if the pipeline is clear of friction. Let's scale out to macro market performance. The chart on this slide tracks the performance of human-centric portfolios against standard indices. Companies rated as the Glassdoor Best yielded a plus 124.31% return versus the S&P 500 at plus 78.4%. Fortune 100 Best portfolios generated an astronomical plus 1,982% return compared to the S&P 500 benchmark of plus 978%. This proves that human flourishing is a forward-looking financial signal utilized for valuation arbitrage. The Oxford metric shows that a 1-point increase in employee happiness on a 5-point scale correlates directly to a 1.0 to 1.2 percentage point increase in return on assets. The market has spoken. Healthier cultures are fundamentally more valuable businesses. This is where we introduce the engineering solution. Introducing INA, Engineering the Living Ecosystem. As the slide states, transforming a workforce from a mechanical liability into a high-yield asset requires precise structural engineering. We don't guess. We design and install the specific, systemic frameworks that halt capital leakage and initiate cognitive restoration. Our ecosystem centers on 3 precise nodes you see anchored on this blueprint: capital preservation, risk mitigation, and cognitive restoration. Let's look closely at the exact mathematical returns each of these specific engineering modules yields. Let's review the precise mechanics of Result 1, Radical Capital Preservation. Look at the 3 columns in front of you: challenge, approach, and result. The challenge we are confronting is the invisible evaporation of liquid capital and protected institutional knowledge through chronic employee friction. INA's approach is the immediate implementation of engagement frameworks that replace the outdated mechanical extractor with connected ecosystem support. The definitive mathematically validated result is a reduction of turnover by up to 51%. For your 100-person organization, cutting your churn rate in half instantly halts severe 50% to 200% salary replacement outlays, keeping your capital inside your bank account where it belongs. Let's examine Result 2, the Cognitive Restoration Multiplier. Look at the financial equation graphic across the top. Every $1 invested in the INA intervention matrix yields $6 out. That is a 6-to-1 total value return, derived from $3.27 in direct healthcare savings and $2.73 in localized absenteeism reduction. Review the benchmark data from Aetna at the bottom. An 11-to-1 ROI was realized through targeted mindfulness and cognitive initiatives, leading to a 28% reduction in stress and 62 minutes of clear weekly productivity gained per employee. For a 100-person business, gaining an hour of peak operational performance per worker every week injects 400 hours of monthly capacity back into your enterprise, entirely free of charge. Look at the visual contrast on this slide between the before and after gauges. On the left, you have high stress and legal liability ticking into the red zone. On the right, high mental acuity and performance pinned cleanly in the gold. INA directly confronts the challenge of toxicity and unmanaged stress-breeding multi-million-dollar legal liabilities in the gray space. Our approach utilizes proactive cultural engineering as a structural defense mechanism. The data from major enterprises like SAP shows a 200% ROI achieved strictly through corporate mindfulness training. Furthermore, proactive harassment prevention yields an ROI ratio between 4-to-1 and 8-to-1 within 24 months, entirely funding your cultural transformation. Let's read the lines of the diagnostic matrix to compare fiduciary standards side by side. Look at row 1. Capital leakage. The mechanical extractor leaves you with a high burn rate up to 213% executive loss, while INA delivers protected knowledge and up to 51% churn reduction. Row 2. Operational margin. The legacy model remains completely baseline and stagnant, while INA unlocks a plus 23% profitability lift. Row 3. Cognitive burn rate. Legacy is depleting with 78% higher absenteeism, while INA is regenerative, driving an 11-to-1 ROI on cognitive restoration. Finally, systemic risk. Legacy sits at a critical $850,000 average exposure, while INA contains that risk to achieve a 63% drop in safety incidents. The financial choice here is stark. We execute our methodology through a clear 4-step pipeline titled Hope Grounded in Logic. We begin at Step 1, Identification and Diagnosis, where we map the precise cost of ignoring and capital hemorrhage specific to your firm. We then move to Step 2, Structural Ecosystem Design, moving beyond surface-level symptoms to architect customized cognitive restoration interventions. Next is Step 3, Transferability and Execution, where we deploy specific, data-backed frameworks to reverse toxicity and friction in real time. This leads directly to Step 4, Quantifiable Flourishing, achieving the mathematical ROI, reduced risk, and expanded margins we have mapped out today. This is a light-touch, highly structured implementation designed to fit seamlessly into your existing workflow. Look at the continuous rotation of the high-yield flywheel. It begins with a deep investment in human flourishing. That investment directly sparks Node 2, cognitive restoration and higher yield output. That heightened output drives Node 3, a severe reduction in churn and liability, which ultimately delivers Node 4, capital preservation and margin expansion, which completely funds the loop. As stated at the bottom of the page, deep care for human lives is not a moral concession. It is the ultimate fiduciary responsibility. By optimizing the ecosystem, human capital becomes a self-funding, perpetually appreciating asset. Let's take the guesswork out of your equation. Look at the invitation on this final slide. Assess your cost of ignoring, COI. We want to help you discover the exact liquid capital your organization is losing to the gray space right now, and demonstrate how ecosystem engineering can recapture it. I invite you to schedule a no-cost, no-obligation 20-minute discovery call with Ina. On this brief call, we will assess your current operational drag, validate transferability to your specific market sector, and outline the mathematical ROI of human thriving tailored specifically to your 100-person team. Let's close the blind spots and secure your capital. Let's schedule that conversation today.